All right, let's get some insights on the news that's shaping markets. For that, we want to welcome in the one and only Peter Tuchman, senior equity floor broker at TradeMoss. Yeah, well, I feel like we need a round of applause.
Intro.
Yeah,
Thank you.
Because, Peter, you are a legend down here. I mean, people know you on the floor, off the floor. But let's talk a little bit about what we're noticing this week in terms of the price action and what's fueling it. So inflation is top of mind this week. Right. CPI yesterday, PPI out today.
Right.
It was more tame than expected, but then the market seemed to get a little worried, and now it seems like we're churning. What do you notice about the patterns in reaction?
So churning's okay.
Okay.
Churning's okay. For me, the way the market is acting, we had a couple of days when Mr. Trump started engaging tariffs again, where the market felt like it was trying to go down. It was a little bit of a negative feeling once again because people's memories of bringing up tariffs. You know, we got distracted by the wars in the Middle East for a while there, but our memory of tariffs and the market is that, that aggressive, self-inflicted sell-off that we had from February 19th down into the lows of that April, so people were hoping that we weren't going back there. We weren't going to be throwing out these big numbers and very aggressive, bullish tactics. But I think he's matured a lot, and I think he's noticing that the market prefers a little bit of a more
measured approach.
A measured approach. Thank you. Really well said there. And so now we've pivoted, right? So all eyes are then on the economic data that comes out. So where is the inflation? So I don't think we're far enough into the tariff cycle to really see the effects. Although we did see it yesterday yesterday was CPI. Was CPI, right? That consumers are carrying the brunt of the increase in prices in the tariff space. That's probably going to get a little bit worse, as it were. And how is the market going to deal with that? I think what we're seeing is, we're still trading at record highs, or give or take 0.5% off.
True.
So how is that, with all the uncertainty still around the tariff story? How is that possible? I think there's a lot of money on the side. And I was on CNN with Dan Ives to bring up Mr. Ives once again, and we talked about it. And there's about $6-7 trillion on the sidelines of people that are having to play catch up. These are people who maybe went from institutions who were heavy equities coming into the end of the year, probably went into a lot of cash before the new administration came in, whether they were Trumpers or not, basically because we knew the policy was going to be about tariffs, and that is a bit of a wild card. And so they looked good for a while when the market sold off. They tried to play catch up when the market rallied, but no one believed that rally. And so what you're seeing is, when you see these days where the market opens and sells off, and then you see a beautiful trend from lower left in the chart up to the upper right, for me, and you see even with the Dow down, you see advances versus declines higher. That means there are buyers of intent. These are buyers who are thoughtful. You mentioned the retail community. The retail traders have really matured a lot since the days of COVID, right? When we saw that amazing, in the midst of the April sell-off, it was not retail who was selling that in fear, right? They were the ones who were buying it on the dip, and then so that's a good point to notice. Go ahead. Sorry.
And I was going to say, what I'm hearing from analysts after analysts, experts on the floor, such as yourself, is that the retail traders were the smart money this time around.
Yes, they were, and I'm really impressed with that. I've been welcoming them since the beginning of COVID. I have an academy with my partner David Green, where we try and teach young people about the market, right? And people are trading futures, right? They're trading equities. They're learning about the market. They've already seen a few movies, so they know what to expect, and so they're not as fearful as they were. They're not sort of playing catch as catch can in the market. So you're seeing that, and you're also seeing, look, earnings last quarter were good. The only problem that pulled the market down was the lack of ability for guidance,
the uncertainty,
right? Because of the tariffs, right? Even all the way from United Airlines to General Motors and Ford, and that really feared the market. That we have not seen that since COVID, since November when Jamie Dimon said, I can't give guidance, and this is the first time in my career that I can't. That was November 2021. So, however, we're seeing already the first ones to come to the table on earnings are the banks. The bank stress test that came out about 5 weeks ago was solid. The balance sheets are looking good. Earnings are solid coming out of the gate yesterday. JP Morgan, today Goldman Sachs, trading at a record high. So you know what? And we're not hearing about an inability for guidance, right? We're either not hearing it or we have a reasonable guidance. So I think with earnings are the lifeblood of this market, right? There will be a little bit of a pullback when the tariff thing comes out. Dan Ives believes that worst case scenario is going to be 15%. Best case is at 10% across the board. There may be a couple of standouts, in different countries, whether it's Laos or Philippines or some countries that he's going to pinpoint, right, for whatever reason. But we're going to get through this. While we've been focused on the Middle East, a lot of backroom diplomacy was going on. So, Lutnick and Bessent are making deals. There's some deals being done. You can just sense it. Right. And the market seems like they believe it. And so why would you, with still uncertainty, why would you be trading at record highs? Because people have confidence again in the market.
So there's confidence. And what do you notice now about volume? Is it, kind of more
volume
traditional?
Volume is fine.
Okay.
We've been trading, look, weak volume to me is 800, 900 million shares here on the floor of the NYSE. Every day for the last, as far as I can remember, we are at 1.1, 1.2 billion. And that's not what I'm, the globally consolidation, but that's just the NYSE.
Got it.
And so for me, that's 250 million shares more than we usually have. So volume has been solid. I see, you know me, I trade market on close imbalances. We're seeing huge programs come into the market on both sides. So what you're also seeing is a lot of rotation. Rotation is a good sign that the market, people aren't bailing.
Right.
They're just coming out of the higher low performers and getting into things where there may be opportunity. And that's a good sign of confidence, right? And so I think that's one of the bigger factors too that's taking the market to record highs.
Okay, yeah, there's some conviction there behind it. All right, Peter, we'll leave our conversation
always
there
a pleasure.
for today.
Thanks so much. Yeah.
Always. It's always
Happy
great
trading.
to hear from Peter Tuchman. Yes, happy trading indeed to our community of viewers here. That was Peter Tuchman, Senior Equity Floor Broker at Trade.